Dive into the heart of Cleveland's business community with the Cleveland Burning Podcast. Join me, Kim Kitchen, owner of Burning River Marketing, and Kirk Tietz, owner of Cleveland Custom Coatings, as we explore the untold stories of local business owners. In this engaging series, we focus on the setbacks, accidents, and unexpected turns that pave the way for ultimate success. So just like the Cuyahoga River ignited change in the city, our podcast showcases how adversity can spark innovation and growth. Hear from passionate entrepreneurs who have braved the flames of failure and emerged stronger and more resilient. Get ready for candid conversations and a behind-the-scenes look at the business landscape in Cleveland. What's up, Kirk?
New year, new me.
Good.
I went to the doctor. I was like, I told him I tried to lose a little bit of weight. He said, don't eat anything fatty.
All right, it's gonna be.
I said, you mean like no bacon, no potato chips, nothing? He said, no, fatty, just don't eat anything. Then he recommended me go to the gym. So I figured baby steps or whatever. So I actually went to the gym yesterday.
No way.
Yeah, I did. Maybe next week I'll go inside.
Oh.
Not quite sure yet, but baby steps.
There you go. Good.
Oh,
New
awesome.
year, new you. Well, welcome to the Cleveland Burning Podcast, where we dive into stories of local professionals who've braved the flames of adversity and emerged stronger than ever. I'm your host, Kim Kitchen.
And I'm Kirk Tietz, and today we're interviewing Matt Panigutti. Did I say it right?
Panigutti.
You said it. You nailed it.
Man, I usually get everyone wrong.
Panigutti.
You got to say
It's
the
phonetically,
Panigutti.
it's phonetically correct.
He's the
Panigutti.
division director at American Pacific Mortgage.
Yep. So I knew Matt first, so I get to introduce him. I met him at the Tag Team BNI chapter, and I know Matt's been in the mortgage industry for over 22 years. Very impressive. Were you there for his 10-minute presentation?
I was not.
No, it was great. It was awesome. It was very
you.
good. You could tell he has a ton of experience, and he's held and managed every position in the industry from like entry level to executive management. So Matt, why don't you tell us a little bit more about you and the mortgage industry, and don't tell us anything about failures yet, but just about how amazing you are and everything you've accomplished.
This is tough for me. So I've been in this for 22 years. I started January 14th of 2002 or 2001 was my first year, right? So that would make me 23 years, right?
You're just a baby.
Yeah, no, I was so young. But I've been in it for a while. I've started as a loan officer, of course, and then moved my way through multiple positions, and then in management, and then we started our first company. The very first company I started was in October of 2005. Was a silent partner in a mortgage company, and then of course 2008 happened, and then started all over again and became part of a branch of a group, and then grew that, and then we went and moved on to another group, and then finally I think we talked about all the different companies we've all been part of if you've been in the mortgage industry as they close and open, and then started another mortgage company in 19, and then of course got acquired by where I'm at now at American
Oh,
Pacific
is that what
Mortgage.
happened?
Mhm.
Okay. So then you guys must have been rocking and rolling if you were big enough to get acquired.
No,
by...
acquisition is not as fancy as you think it is.
Oh, really?
Acquisition is like, nowadays acquisition is like you're failing.
Oh, really?
So you need to get someone to acquire you because you don't
Okay.
have the necessary assets. So it's not
Okay.
like you're getting bought per se where they're paying you money. They're basically just saying, hey, we'll let you join our group.
Right.
And then, so it's not fancy. It's the opposite.
Okay.
It's a failure point.
Okay. Well, what's the American Pacific Mortgage? Your division director? Or
Yeah,
what are
that's
you...
correct. So it's almost like
what do you do there?
franchising.
Okay.
So like with mortgages nowadays, when you're part of these organizations that are large, American Pacific's a pretty large place. You're like a franchisee. You know what I mean? So I have a profit and loss, and underneath their umbrella, and then we have branches underneath us, and then we have branches across the country that work with us. We just basically facilitate help for them and work with them, and then manage our own little interior branch we have as well.
Okay.
So that's basically it.
So I'm always impressed by people that have been in the mortgage industry as long as you have, because I was in it. I got in it in 2000 and I think I got in 2001. Yeah, because I remember my oldest daughter was born in 2001, and I started in the mortgage industry and had great success in a number of positions, and then companies started going out of business, and it was really rough. And I was with probably 5 companies that went out of business in like a 3-year time frame.
Yep.
Before I finally was like, I'm not doing mortgages anymore. And I loved it. I mean, I loved talking to the people. I loved helping them with their finances. There was nothing better than when that loan closes and everybody's happy, and but it just wasn't worth all the the turmoil. So the fact that you stuck through it and that
Yeah.
you have thrived is very impressive to me.
It's been rough, but yes. Yeah, definitely. And I've never thought about quitting it. I know a lot
Really?
of people have, and over the last, I mean, I think we're down like 50% people now renewing, but I don't think about, maybe I'm just different. I just haven't thought about ever quitting. I've always been in it, and I probably will always be in it. It's never been a thing where like people were like, oh, maybe I'll look at going another field. I just think I've put so much effort and gained so much knowledge in this field, it'd be a waste if I went somewhere else.
Yeah. No, it would be.
Yeah.
You're obviously a total mortgage pro. So the theme of the podcast
Yes.
is about failure.
Yes.
And anyone that's been in the mortgage industry for 22 years
Yes.
has seen some failure. So probably picking just a few failures that would fit into
Yeah, for sure.
less
There's
than
a
a
lot of
30-minute podcast was challenging.
For sure.
But why don't you tell us about the worst failure you experienced in your business?
So the worst one, I would have to say, would have been the one that we, in the economic collapse. I think at the time, I want to say we had like 200 and plus employees. If you consider the call center people that worked for us.
And you are referring to the 2008
collapse.
Yeah,
You got it.
yeah.
Yeah. Which, everybody knows about.
Everybody knows about that.
Where the mortgage industry burnt the world almost. Yeah. Correct.
It was so crazy.
It was crazy. But yeah, so that was probably the worst. I think we talked about this, but it was afterwards I lost everything. Because we weren't prepared for it. So you didn't financially put away enough money. You didn't think, and it was such a quick run.
Right.
Up to the top. So I didn't have a lot of liquidity, and when it did fall, it fell hard.
So at that time you owned a mortgage?
Yeah, so I was a silent partner. Me and another person, me and my one buddy I played football with in college, we were offered silent partnership. Basically how it worked is some guys that we were at the other mortgage company with, the one before this, where we were managers, they started a mortgage company and a call center. And the goal for them was to grow the call center pretty large and then give us the mortgage company, or at least that's what was told to us.
Right.
So we were going to eventually, me and the other guy that I was real close friends with were managers at the other place. They were going to grow the call center real big, take that thing public, and then we were going to get the mortgage company. And they were going to use our mortgage company.
Were they feeding each other? Was like the call center generating the leads?
Yeah.
And then the mortgage company was placing the loans, and then they would be the loan originator and introduce themselves as like, now I'm your loan officer.
So how it worked out, you're on point. So what happened is that the call center goal was, for them at least, because we weren't really part of that, we were part of the mortgage company.
Yeah.
The call center's goal was to not just deliver us leads. So they would call as the call center and then transfer those leads to the loan officers that we had.
Oh, so you'd pick up the phone
They'd
and
pick up the phone
Mr.
and-
Smith was on the other line.
You got it.
And
You got
the
it.
call
There are
center had
hot
already hooked
transfers.
them up and just determined there was a need, and now here's your loan officer, Matt Panigutti.
You got it.
Okay.
That's exactly how it was. So they would take an application downstairs and then live transfer that to us. But they were also supposed to get other contracts. So they did some, but not many, but they were going to
Makes
try and
sense.
do like insurance companies, call center
Sure.
stuff, politicians. But it didn't really come to fruition. It didn't grow the call center. So it really ended up just being a huge just lead center for us.
Right.
Because that was the goal of it. They wanted, that was not the goal. I'm sorry. The goal of it was to grow it for outside that, and then
For other than mortgage leads,
Yeah,
like
you
for all
got it.
kinds of things. Anything,
Yeah.
anytime your phone rings and it's someone soliciting something, that would have been coming from a call
Correct.
center.
Yeah, and then there's a lot of like, after hours call center stuff, or when you call a company, sometimes you don't actually call that company. You call a third party provider for them that they use a call center for.
Right.
And so that's what it was supposed to be. And then we were supposed to grow the mortgage company utilizing the lead source, and then we would just separate and get the mortgage company. But as we know, it wasn't really a long-term thing. They
Right.
didn't get the call center off the ground, and we got the mortgage company going, but it didn't go long enough. It was basically it was 2 years.
Well, and if I remember correctly, right around that time, that's when the do not call list came out.
You got it.
And so there were people that you would
Yeah.
call, because we were calling if you got a pull on your credit report. So what were those called?
Trigger leads. Yeah. Oh yeah.
So I was
Yeah.
calling trigger leads. So if you called someone like Matt and said, I really want a mortgage, what's your rate? then you'd get your credit pulled. And then I would call from whoever. I worked for Ameriquest Mortgage Company, Equity
Yeah.
Consultants. I worked with a handful of them. And I would say, hey, it looks like you got your credit pulled recently looking for a mortgage. Let me see what else I can do. I'm sure you want a second opinion. So, but then they would be like, I'm on the do not call list. You take my name off your list. I'm on the do not call list. And everything was do not call list, do not call list. So that must have changed the whole call center
Really
thing.
changed it.
From, I don't even know if those are around anymore.
So they are, and trigger leads are actually still pretty popular, even though, there's a big push right now. There's a new bill that was introduced, I think it was like the 15th or 13th of December to try and outlaw them.
It doesn't sound ethical. I don't know how the credit reports are able to sell that information. But then when you look into it, the credit agencies that we use, it's not like they're run by the government. They're just like, they're
independent.
Yeah.
Independent. But I can't so I'd be extremely,
Yeah, you
I use those things, so I can't.
Yeah.
Because it would be like, okay, well, I can't talk bad about them because you use them, so I'd be contradicting myself. But I agree with you. I don't know how
that's
I'm able to even buy those.
Yeah.
Right.
It just doesn't seem ethical. You're correct.
But
and
on
so they're trying to
the
change it.
good side, I mean, I did a lot of loans for people, and that's how they were originated. And those people were very happy with me because the first person that they worked with was not doing a good job and gave them, bad information and wasn't following up. And so they're really happy that I did call them from that trigger lead source. So, it is just kind of weird to think that you get your credit pulled and now someone might be calling you because they got that information from the credit bureau.
If it's legal though, then
correct. It just gets abused.
Sure, but if it's a source that I could buy, that I would know every time somebody asked for a painting lead, and that I could call them, if that ability was there, why wouldn't I use that source though?
Yeah.
And just give them another option and a price that they could bid. So I don't know, unethical or not. Maybe the people don't like the fact that they're getting the phone call, but it's legal.
It is legal.
It is legal.
It is 100% legal. So,
and there's no list for painting.
Appreciate you making me feel better about buying those. There
you go.
Thank you very much.
I'm just being honest. If I could buy them, I would.
Sure, everybody would. Yeah. And so, that they're still hard. They still go pretty aggressive today. There's some ways we try to get around it with doing a soft pull instead of a hard pull and all this other stuff. But there's still one of a pretty good lead source, especially for purchase leads, because it's hard to just get those. So really, you're just ambulance chasing, basically, is what it is.
Well,
something else's pool. But if your rates are better and your product's better and your service is better, those people
they're
did benefit.
They're going to be happy that you're called.
Right,
Yeah, exactly.
Yeah.
So the call center didn't take off. So you got this mortgage company with how many employees?
So the mortgage company probably had about 85 people in the mortgage company, and then the rest of those, let's call it 200 plus people, were the call center.
And that all fell to crap because you don't have any
in one day
lenders.
and
No
there
one's
was
lending
nobody.
money. Yeah.
So that was, so I was young, of course, and so it was a great experience at a young age about business.
How old were you?
I was
28?
30, 30. So, cause I'm 47 now. So that was I always tell people I'm maybe 47, but I'm 90 in business age. That was wild.
Right.
That was absolutely wild. We were a pretty big company. We're one of the bigger ones in the city at the time. And it was we'd have 40 loans closed. We'd come into work and they were like, we're not funding those 40 loans. I'm like, no, they closed. I understand you close your doors. You're not closing any more loans. But those loans closed, they should fund. They're like, we're not funding them. I know they closed. Yeah. And it's you got to call those people back and
they
those
signed
checks
for an hour. They signed in front of a notary. Yeah. And they thought that they didn't have to pay their mortgage payment because it was going to be a new mortgage. So they had 2 months off of mortgage payments. They thought that they weren't going to have to pay their car loan and all these other things you were consolidating.
Get a check.
And they signed in front of a notary. And now you got to tell them yeah, just kidding. Psych.
Yep. And then you would get out of those 40 people that you maybe get maybe let's call it 28 of them to even talk to you again.
Right.
And then you try and give them to another lender, and then you close them again. You close them again, and then that company would go out of business. It was probably the wildest 60 days of my life that I've ever seen. And it was what are we going to do? There was a list called the implode meter, and it would literally just list all the people that went out of business every day.
Wow.
And was just tracking all the lenders that went out of business. It was a wild ride. I'm sure it was wild for everybody, but for me specifically, it was just, I didn't know what to do.
I got a little lucky in the 2008 crash. I'm going to be honest. So I did new homes, right? And we were doing brand new homes, and I did them for years, high-end, $500,000, $1 million homes. Yeah. And It's about 6 months before the crash, I actually joined the union and started doing commercial painting work, which really was not affected by
Right.
Yeah.
the home crash. So all the painters that I knew that were doing homes still, because they weren't building anything.
Right.
Yeah.
So I
You got
just
You did
very
get lucky.
lucky
I was going
that
to say,
I
you made a
changed.
perfect time change.
Yeah, it
That
was a
is-
very lucky change at the right time.
Yeah, for sure. Yeah, and then we just had to go at it. We didn't, and the big failure point of that one was we weren't up on top of our product knowledge enough. And FHA had changed because FHA ended up becoming the main product after that.
Right.
FHA had changed the way they did business, I want to say, in '05. And we
Okay.
just never reverted back to C or check or no. So we never got FHA
C or
approved.
check or no? What
Like
is-
the changes. So we never like reverted. We tried to do FHA back, I want to say, in '04 and '03 at the company we were at previously. And FHA had like soil sample tests, and it was just a pain
Okay.
in the butt to close the loan.
So for our listeners, let me see. I'm going to try to explain FHA, but I'll probably do a crappy job. So you'll
you're
just,
good.
You
I'll
can,
fill it in.
Yeah.
You
So
got it.
FHA is the Federal Housing Authority, right? That's
Yes.
what FHA stands for. So when you do an FHA loan, it's sort of government backed.
You got it.
But so that means it's less risk for whoever's putting out the money because you've got the government that's sort of backing it. But that
Mm-hmm.
means that you have like stricter guidelines. I mean, I remember we used to get a lot of scratch and paint, or what was it?
Scratch and
scrape,
dents.
scrape and paint.
Oh, scrape and
Like, you
paint
had to-
stuff. Yeah,
So
correct.
it was like a lot of,
Still the
times you
same.
needed an appraisal.
Yep.
And the appraisal would come out there, and if it's an FHA appraisal, it's a little bit more strict.
Got it.
So that's why back when we were doing subprime loans, why would you do FHA? Like, it's too much stuff.
Too much.
To
Yeah.
you don't get to borrow as much money.
They're the government. They're here to help.
Yeah. So you weren't really interested
Yeah.
in FHA at the time, but now
It
after that
changes,
crash, you
yeah.
needed FHA was the only way to get
That
money.
was really it. And
Okay.
it changed too, and we didn't really pay attention to it. There was some guys that I knew that did really well with FHA after '05, and we were like, how's he doing all those loans? And it was because he knew or she knew about FHA before we did. And we just didn't pay attention to it. So keeping up on our product really hurt us because we had no options. We only had subprime. So now at that point, we were optionless. So we had to basically terminate. I want to say it was like 90% of the staff. I remember me and a manager of mine had to go and literally put everybody in an office and terminate them all. And it was horrible. Everybody was crying and people were sad. It was. I mean, you've been through. It was rough.
Yep.
It was rough because you're terminating hundreds of people.
I worked for AmeriQuest. We shut down offices, and then we'd say, "This is it. These are all the offices we need to shut down."
Yeah.
And then like 3 months later, we'd shut down all the rest of the offices.
Yeah, that was wild. Like on that side, the actual lenders, because I had partnered up with a guy that was, a VP of one of the lenders, and that side was even worse. So I thought, it made me at least feel luckier than what they had to go through because they had to shut down. They would tell everybody they have to get on a conference call because they were told they're fine, and then they weren't. And then they had to fire everybody they just told were fine.
Right.
And didn't plan on this, and then they just had to do it again and again and again. Well, we just did it once. Luckily, I just had to do it one time, and that was it. And then I had to just get back on the phones. But the reason for the failure for that one, since this is what the podcast is about, was because I didn't keep up on product knowledge. So I didn't make sure that I kept my knowledge base for the industry I was in up to date.
It's like a continuing education.
Continuing education, you got it. So people, and this is common currently in my industry and probably other industries too, where like stuff will come out and people just don't know about it until way later.
Right.
So the change we made actually, and I can explain, the next part, but like that change that I made on that day when we realized that was the reason for failure actually made us a ton of money later on when the HARP program came out. And so we were on top of that one. So from that day forth, I just said, listen, I'm always going to read everything. I'm always going to try and focus on the industry.
Yes.
So that was the change we made that helped us to become extremely successful later on the HARP program. So we always keep my ear, read every email I get, I read it. Like I'm sickle with it, but I tried to stay on top of all of it. Even stuff that doesn't pertain to like my business, but is mortgage based, I try to read that. And so later on, when HARP came out, I was on a golf course. HARP program, sorry, yeah, I'm talking like everybody here in the podcast knows.
Yeah, tell us about
HARP program. It was a program that was put out there by President Obama. What it did is during the collapse, everybody lost a ton of equity in their property, so properties went underwater. And so they didn't want people to walk away because rates had dropped drastically.
Sure.
And so they wanted the people that were actually being on top of it and making their mortgage payments on time and stuff to be able to get those lower rates. And so you wouldn't be able to with the normal guidelines because you would be underwater. So
Right.
your house would be worth less than what your mortgage was.
Sure.
So,
So let's do some quick math. Like, let's say I have a $200,000 house, but
Yeah.
I owe $250,000 on it.
Yes.
I'm underwater.
You got it.
Okay.
Yeah, that's exactly it. So like that's a great example. So now you wouldn't be able to refinance. So
Right.
your rate could be 8, 9%, 7% at the time, probably like 7%. And the rates were in the 5s or the 4s, and you couldn't take advantage of that
Right.
because not because you haven't made you don't have great credit and you've been paying on time, because your house just isn't worth it.
Right.
So they came out with a program and announced it almost a year in advance that they were coming out with it in 2009, that you could refinance your product or your house, I'm sorry, and you can be underwater. So there was no LTV
I
restrictions.
didn't know that.
And you
That's
could do what's
good
called a
idea.
rate and term loan, where you're just paying off your mortgage, the first mortgage, and just reducing the rate. Basically like a streamlined loan for FHA or VA. So they came out with that. But so me and a friend of mine, a guy still works with me today, we were on top of that one and knew about it in advance.
Nice.
Well, he had started a website, him and his cousin, who used to do marketing for websites online. This is before Google had real Google analytics, where basically if you clicked on my link and got into my website, that counted towards
Oh, okay.
towards your Google SEO
Yeah,
numbers
yeah,
or
yeah.
whatever. And so he knew that. So his cousin had a carpet company that sold carpets online. And so they got partnered up and started this website called heartprogram.org. And the government's was heartprogram.gov. But they had gotten in and started that before the government started theirs, because we had been on top of that program. And so this website
It
ended
would
up
show up higher than
the government's. The
yeah.
government forced Google
Yep.
at one point to force it to
take
go
it
below,
down?
to move
That's
it to
funny.
second.
Yeah.
Wow.
Naturally was above the government's website. So they would put applications on his website, and me and him would share in those
Oh my
leads, and
gosh.
we would close them. And I made a ton of money and did very well because I learned from my mistake of
Yeah.
not keeping my ear to the ground in my business.
enough.
And
So now
kept
you
on
pay
top of that.
I
attention to the
agree. I
program.
mean, even real estate agents and a lot of other industries, they have to do a continuing education.
You got it.
You know, in the painting industry, that's not like as common. But what I do is I stay up with the, the biggest material
Yep.
companies, Sherwin-Williams, PPG, and I actually sign up for programs so that when they come out with a new product or a new line of something,
Yeah.
they'll demo it to me.
That's awesome.
And I'll get to go use it, try it, understand it, give them my feedback or
Yep.
whatever. And that keeps us a little bit on top. And then we also belong to PCAs, a Painting Contractors Association.
That's awesome.
And they're always giving out new products, new lines, new things, different training,
Yeah.
that's in for different products and stuff. So
That's huge.
I think it's huge for everyone to stay up to date with what's going on.
Yeah.
In the painting industry, they just actually starting as of January 1st, oil primers are not allowed to be sold in the state of Ohio anymore at all.
Really?
So they're only allowed to sell the stock that's inside of the warehouse. They cannot order, make, or produce anything else. And then, when it comes to like rust inhibitors and stuff, oil's the only thing that really covers it. So we've actually, knowing this, because we get all those updated that this is what's coming down the line, we were able to actually start trying primers out that would help. So now, by the time everyone else is now trying to figure it out, we already know the process that we're going to use.
That's
That's
awesome,
perfect.
man.
So I'm just saying that I agree 100%.
Oh, yeah.
Yeah,
We're
no, that
continually
makes
staying
total
up on
sense.
what's going on in the industry is very
Yeah.
important.
And
Yeah.
people don't do that. I don't know if because I only have experience in my industry, because as you can see, my entire adult career has been in mortgages. Before that I was a bouncer. So what are you going to do? I can't stay on top of that. But what I'm saying is,
Stay on top of bouncing.
right. So the
Continuing
only thing I
karate
have
classes.
experience with, right? The only thing I have experience with is mortgages, and it just seems like in my industry, that seems to be what's lacking. I don't
Yep.
think the people in my industry do that enough. I always say that my brother's a surgeon, and I always say if people gave the effort in surgery as we gave in mortgages, there'd be a lot more dead.
Oh my God,
people.
wouldn't there be?
It's wild, and
Yeah.
it just I wish they would, because it'd be so lucrative for them. But in most cases they don't do it.
No, I love the story and what you learned out of it because, reflecting back on the 7 years that I was in mortgages, I never read an article about mortgages. Never did I pay any attention to what was going on in the industry or FHA or anything. It was just like I was selling anything. I was selling carpet or coffee cups or something. You know what I mean? It's like, this is your coffee cup. This is your lead. Sell your lead this coffee cup. You know, and so it was like, okay, I got to figure out what they want to drink and if it's hot or cold, and then position my coffee cup so that it's going to be what they want. You know, but there was no, you didn't find, I wasn't reading anything about mortgages and what was going on with FHA loans and things like that. And what I love about your story is that you identified that in your first failure, and then by changing your habits and starting to read everything, you actually, you know, took that whole heart program and you beat the government by with your website. So it's really cool.
Awesome.
You find opportunities, right? You find opportunities when you're staying in front of things, because if you're the first person that knows the most about a new product, that's now your competitive advantage.
It was extremely lucrative. So it was
the government does not like competition.
No, it does not.
No.
It does not.
That's why stealing is illegal.
Is it? It makes sense, honestly, from an SEO perspective. Your website was older. It was there first, so you are going to show up higher.
And it was back in the day when all you had to do was just send a bunch of emails out to people and say, click my link.
On the website.
And they click on it. And
anymore.
No, they're smarter now.
Yeah.
They were not smart back then, but this is a long time ago.
That is really cool. So we usually like to leave on like kind of a fun note, although this was really fun talking about like the whole shit show that the mortgages were
it was
in 2008.
It was wild.
But what's going on at American Pacific? Like, what can you tell us? How can we help you? Like, what can our listeners do? You hiring? Like, what's going on?
So we, I mean, of course, we're always looking to hire people in production. Right now, you know, operational hires were big back in the day, and you had to overpay everybody. But now it's more production based because, of course, production is down drastically in the mortgage industry.
Like commission.
So the salespeople, loan officers, branches. So we have American Pacific is probably it's probably like, I want to say it's like the 10th or 11th largest retail lender.
Okay.
It's a pretty large company, and the good thing about the company is that they're very very branch success minded. So they're always looking to be helpful. Our group is a very close group, so anybody joining our group gets to be part of our team. But American Pacific has basically one of the greatest setups I've ever seen for technology, for pricing, which is extremely competitive. It's an open platform. So if you wanted to broker loans, you're allowed to. There's no like, hey, you can't take this loan to where you want to take it. It has to go in-house. We have a ton of products. We do non-QM in-house, so we do a lot of the non-qualified borrower stuff.
Really?
So the self-employed borrower using bank statements, the DSCR loan, which is real popular right now. We do those all in-house, which is the one where you don't qualify off your income, you qualify off the rents of the property. We have a lot of we have a construction department that's very helpful, a renovation department, a reverse department. So there's a lot of things that when you join companies, you don't get assistance in. We have a scenario desk that's always available, even on Saturdays. Underwriters send you video updates. They also call you on files. So it's a very production mindset based company ran by a bunch of guys that were in production.
Yeah.
So it is the greatest company I've been part of so far. And then their tech and share their platform, their SharePoint platform, where it makes it super easy for you to jump on and learn stuff. It's pretty awesome. They're always looking to keep people up on trainings. And then the good part is we pay extremely well. The pricing is extremely competitive. And you know, it's a very great opportunity for anybody.
That's really
and then
cool.
for borrowers, pricing is important. You know, so we have all the products available for you, and your pricing is going to be extremely strong. And we have a team of people on staff that will be able to make sure that when you do get a pre-approval, it's a true pre-approval, and it's underwritten and with loan commitment. And so we stay on top of that. We've been getting loan commitments back on borrowers from underwriting within a day.
Wow.
So, you know, you apply with
That's
us,
really
we get all
nice.
your documents, we submit you to
Probably
underwriting.
really important right now because it's what do they call it? A seller's market. So that
Yeah.
like a buyer, like if I finally find a house that I want, you know, I'm going to want to get some sort of pre-approval and put an offer in like right away.
Yeah, so you have loan commitment at offer, which is huge.
That is.
And most time they want you to get a loan commitment within 20 days. We're having our borrowers give loan commitment with the offer, which means they met all their contingencies for financing. So we've been really staying on top of that, which makes it, we make that initial outreach and say, hey, not only, you know, hey, listing agent, not only is this borrower pre-approved, but they're also fully underwritten already.
Right.
So this makes them a strong borrower. And there's some
It's
nightmares.
almost as good as cash, almost. I mean, obviously it's not
It's
cash.
not.
You know, cash
Yeah,
is
correct.
gonna
Cash is
win
king.
every time, but
Yeah.
like it sounds like it's closer than a long typical process.
You
with a
got
loan.
it. It is, and it makes it really strong for the people we work with, because there's a lot of nightmares. I mean, I don't know, we probably saved over the last 60 days, we probably saved 20 loans of people that had something screwed up.
Yeah.
And we've taken them from banks and from people. I mean, there's tons of nightmare
Yeah, I
deals
was
that-
gonna ask so banks. I would think banks would be a good referral partner for you, because there's got to be people that are working at banks that they get a customer come in and there's like, we can't do this, like,
Yeah.
and it's never feels good to turn somebody down. It always feels better to say, like, I've got a guy who might be able to help you.
You got it.
You know what I mean? Like, you
Yeah.
don't want to just be like, I'm sorry you spent all this time with me and I have all your income documents and we did all this stuff, but
Yeah.
it turns out underwriting doesn't like this one little, part of your loan package.
Yep.
It's so much better to say, I've got a guy who can maybe help out. So.
Yeah, banks, realtors, of course, realtors are our number one referral source, but banks, anybody that, receives borrowers that they give financing to that they don't know if they can get them to qualify, we have some of those outlier products, and we do a great job fixing credit. So we work with borrowers to fix their credit and get them credit worthy. Sometimes we can do it fast. Sometimes it takes 30 to 60 days, but there's no charge for what we do for them. So we're not referring them like some people to some credit counseling company, which they're going to charge them, and who knows what's going to happen. We do it completely for free. We give them guidance. I mean, we've had my team and myself, I mean, if you add up all the years of everybody, it's over 100 years worth of experience. And then we do have people that were operational managers, underwriters. I've been an underwriter in the past. So when we were reviewing those loans, we're reviewing them with an underwriter mindset, so we know what hiccups may come, and then we can make adjustments and fix their credits and get them ready to buy a house. There's borrowers that we've taken from 510 to 700 before.
Wow.
We had one recently that was a 560. We took them to 640. We've had a lot of borrowers and there's even ones where they were 640. We took to 760, which increases their affordability, lowers their rate.
Yeah, it gives them all kinds of more options.
So we do a lot of stuff like
credit
that.
scores.
Yeah,
for
so what we do
everybody.
is we work with
510 is very bad. It's not very bad. I've had some people under 500. I
Sure.
think I might have dipped under 500
I
after
know I did after
2008.
2008 too. I definitely
Now I'm
did.
up to like over 750. I'm so proud of
How
myself.
do they go about fixing that? Just paying things off?
Yeah,
Is
so there's a
there-
lot of things that people don't realize. Like one of the big things that people don't realize is, and it recently changed, I think it was like a year ago, medical collections that are under $500, they have to come off credit. So if you have a mortgage collection on your credit, a medical collection, I don't know why I said mortgage, medical collection on your credit, and let's say it's for $800, it's on your credit, it's supposed to stay on there. You call that collector, and then you negotiate it, let's say to $300, and pay it off.
Yeah.
They take it off your credit immediately. And most people, and this is true, is like sometimes you don't want to pay off collections because if its last acted date is 3 years ago and you pay it off today,
Now it's
fresh.
Yeah.
But with medical collections, it's deleted.
Oh, wow.
And sometimes we can get them to do deletion letters. So they'll say, if you pay it off, we'll delete it off credit. So we do stuff like that. That's a big one. The medical collection one is a game changer if people don't know it. I mean, that was one I did recently. It was $350 and raised their score 60 points for $350, which increases their affordability, stuff like that. And then there's payoff debt. People don't realize that 30 plus, I think it's like 32% of the grading of your score is credit utilization. So if you have $1,000 in credit cards, your balances of those credit cards should be less than $250. If it isn't, it's going to start to ding your credit. So we just work with them to pay it down. And then some people are like, I pay my credit card off every month. Well, it's because your due date is when you're paying it, and your due date is after the report date. So on the credit report, it'll say the report date's the 10th and the due date's the 15th. So on the 10th, it's reporting, and it's reporting a full balance, and they're paying it off in full on the 15th. So what we'll tell them is, change your due date to before the 10th.
Right.
And so they call and they'll make their due date the 5th, and now they'll pay it off before it reports, and now their score goes up. So it's stuff like that.
Wow.
And then there's, of course, there's timeline stuff where it's like, hey, we gotta have to wait these lates out. but give them a timeline of knowing, hey, in 60 days your score will be X, and then we track it.
Okay.
And do some things where we make sure their score is going to be in point in 60 days.
Well, you're obviously knowledgeable. So, what should we add in the little description of our podcast for contact information? Like, do you want people to just like call you directly, or should I give them like your LinkedIn profile, or send them to?
They can
your
call me
website?
directly because that's usually the best way to get out.
Okay.
I'm old school,
All
but
right.
I'm really tech based. Don't get me wrong. So I know how to utilize tech, and I'm not a tech person. You know what I mean? So I do
All right,
use
I'll
tech.
put
So
your
they
phone
can
number in
they can
the-
call my cell or email me. Is usually
Okay.
the best. I just try to, and then we do have, of course, we do have a mobile app. If they want to download the app, I can give that as well.
Okay.
And then they can just download the app and then put an application in. But I do like talking to people. I enjoy conversations. So if people want to call me and they want to do it old school way over the phone, feel free to contact me. But
Awesome.
email, every way works.
I love it. I mean, I know if I was listening to this podcast, whether I wanted to refinance or buy a house or get a new job, I'd be like, I got to call Matt Panigutti. so thank you, Matt. We loved your
you. I
story.
appreciate
We
it.
hope our listeners did too. If you enjoy our episode with Matt, and we hope you did, please subscribe
Subscribe.
and leave us a review, because we're pretty sure the more reviews we have, the more listeners we'll reach. So until next time, remember that every train wreck can be a stepping stone to something extraordinary. And thanks for joining us on the Cleveland Burning Podcast. Thanks, Matt.
Thank you.
That was awesome.
Thank you.
Thanks for coming, Matt.